All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 21st, 2023. We'll start with the ritual crash. No, we'll start with swing trade portfolio review. So we'll start with, let's go right to the top, sorry. Uh, Alcoa. So Alcoa, we got out of on Thursday, and we're just stalking it. Friday, it was this. We did not elect to take that trade. Um, it gapped up to here, rose up, and then sold off. So we were out of that trade altogether. That would have been a nice benefit, but it wasn't a risk I was ready to take. So we did not trade Alcoa today and are flat overnight. Cliff, pretty much the same thing where we cashed a win on Thursday, remained neutral on Friday. Today we noticed this play. I like that it's holding here above those support levels, so there's some possibility of an intraday trade there tomorrow, which could grow to become our swing trade, but we're flat overnight right now. CVS, this was a long-term Godzilla that ended up down here, and then a grinding long that we made some money on. The stop and reverse made some money. We held this position Friday, looking for a return to the 5-day high. It didn't give us that. It started to roll over, and with broad market weakness, we just got out for a fractional loss and then stopped and reversed. It's Godzilla nature coming together for us. So right now, with the price right here, with 1 unit of risk, we're about +1 in hand on this one. And there's good reason to believe that tomorrow morning the weakness will continue, because now it is cleared all of the support levels. And now there's only this gap right here. And so there's no support in this region whatsoever until you get down to the original breakout box here. So there was good reason to hold that short overnight with +1 in hand. Check or hold. Devon Energy is a long because energy was about the only thing that worked today. And Friday, after the sell-off, it held all the support here. And this has a COTA 2 flavor and a PSAR flip, or an SSC flavor, I should say. So we're long from 53.73 with a standard risk box at 52.50. So that's about $1.25 of risk. So that means there has to be 250 in hand above, so that would be 56.25. So it would have to get to 56.25, and all that means is that it would retrace the gap for this to be a payoff. And then if it gets to here and breaks above this hump of the dragon, there could be more coming. So that was a trade I was willing to take in the strong sector of energy. Entertainment arts, or electronic arts, I should say. So this was another. I want to look back at it. We have been just monkeying around with this thing as a Godzilla ever since it crashed all the way down here and then refused to collapse. Even that little weakness quickly reversed. So we've been getting these little bite-sized particles of wins and losses. And today, when the rest of the market was getting smashed, this thing didn't. And near the end of the day, gave us another PSAR flip. So I'm just going to keep taking that until till something happens. So we're long EA overnight. That's failure to fail right there. And failure to quit, I suppose. So this is emerging markets. The last previous trade was this one where we were looking to go long. It gapped against us, and we took a -2. We tried this long version here on Friday. It gapped down against us for -1, finally took the hint, stopped and reversed, and we've got our we're +1 in hand. And then There's no support over here at all. So this thing has an opportunity to get much lower on broad market weakness. So if we look back further, we don't even see any kind of support until you get over into this region around 38. So that's a reason to hold this thing overnight. There's no support in here whatsoever. So if there's broad market weakness, this should suffer with high volatility because that's what EEM is. Mexico is next. So we trade this one a lot. So Mexico was one where we initiated on Friday. Today it gapped up and started to sell off, and so unlike the other ones, we had a chance to make a little bit right here, and then on the broad market weakness, stop and reverse like a frog would, and that thing just got smashed and closed down here. So on 1 unit of risk, we've got +2 in hand, and more coming. If this fails through the daily low, the next support level is down here at 56.50. So that's another reason to be willing to hold that one overnight short. Is that this seems to be the 5-day channel, and we want to give it a chance to make that move. That's one that will be a high priority to bring that one into fruition. The same thing really in Brazil, only this sell-off was even. We were not even long on that one. But upon weakness here, it gapped down, rose up to here, and then started to fail again. So short, standard risk, failing. There's 1 unit of risk, 1 unit of reward. So we're about +1 in hand on Brazil. International paper. We've been watching this thing ever since this earnings alert and gap and this great big move. We tried the second, the COTA 2 entry. That gave us a fractional. It consolidated into this breakout box. When that failed to the downside, we got 2 positions in and enjoyed that one. We stopped and reversed, and we ended up taking the exit around in here for a micro win. And now this one, there was a big gap down and selling off. I just didn't have time to get that one. But there's more weakness coming on this one, because if we look back far enough, it's right at a crucial support level here. So if this breaks at the 30-day low, that thing is going to come down at least to here and beyond. That's not much support. Once you get past 30 days, this is long distance memory. So that is sort of a rejection of all the optimism that was in the earnings report. So we're going to see something special about this tomorrow. Is it going to rebound from a compound critical state, or is it going to continue to fail? IP is a really good target for tomorrow for the intraday. U.S. real estate. This is one where we've just seen a series of, after a failed long or a scratched long, it's given us a couple collapsing dragons. We finally took that one as a collapsing dragon here, and that one's about +1 in hand on the standard risk. That was one I was willing to hold overnight as well. And again, that's because that one is at a 5-day low, and the next nearest neighbor is all the way back here. And if that collapses, look out below, right? So that one has, that's a defensive play that's just not defending very well. McDonald's. So this is one that on Friday we took the COTA 2 re-entry after we got knocked out of this one. We wanted to make bank on that, and then re-entered the next day, and it closed well on Friday. And today, it really just held support. When everything else was selling off, McDonald's has held above our entry. So that one still feels pretty good. And if we get a recovery tomorrow, that would be a natural leader. And as soon as it breaks above 270, you could start a new position or add a second position if you're already in it. Marijuana, this is a nice trader. We cashed a really nice channel trade on this one on two positions to here. And then we saw the collapsing dragon after the gap down. Standard short, standard risk. And I just took that one as a gift because I wanted to bank 2.5 and make some money and reduce some of the overnight risk. I think I had plenty of short side risk on this and not much on the long side. Clean energy, another one of our frequent traders. Here was a two position long that paid off. We tried on Friday owning at the close. It started failing along with everything else today, so we took a micro loss and then a stop and reverse at the PSAR collapsing dragon, and that one paid off well. There was no evidence of upside at all. So this thing is at a 5-day low and ready to drop. So I like that one position, and we may add a position there tomorrow. Treasuries, the speculative play on support at 102 to try to play this. Gap down, so just instantly out, -1 in treasuries. Didn't get that trade, but if this breaks below 100, then that's a key price level that could take it down to 95. The next channel would be 95. So treasuries is going to be on my short list. Tesla. This is one where we initiated the PSAR flip on Friday, which closed well. But today it gapped down and started selling off. I made a fraction on that one just to get out of the position. It closed very poorly, and this thing could very easily come back down and test 190. It closed below the crucial 200 price level, so now it's very vulnerable in here. And then our last one, U.S. Steel. All I did on this one was initiate at the close of the day. This feels like the bottom of the channel. This feels like the top of the channel. It closed better than the other metals, so I took the RLXD entry, not even front running the PSAR a little bit. Took a standard risk, and we'll see if we can get some traction on that tomorrow. If this fails below the stop, then this support level will have failed, and we'll play that to the downside. So that's a swing portfolio update. Hopefully you guys find that helpful. All right, let's shift now to the sniper trade of the day. So for the pure intraday, this is a target that's on a 3-minute chart. Oops, let me get a different color there. So this is on a 3-minute chart. This is Intel, and it was on our target list because tech was weak on Friday and semis were weaker and Intel was the weakest. So here was the close on Friday. Here was the gap opening, and then this establishes the OR3 range, check or hold. So we're waiting to see a breakout to the long side or a breakdown to the short side out of that. Okay. It stays in the OR3 for a while and now collapses out of that. So I felt like I wanted to 1, 2, 3 right here, but I just decided to wait for that break. So we get the short position, and then notice how small the standard risk box is in comparison to the OR3. That when you combine the size of the gap and a large 3-minute opening range compared to the standard risk, you know that this thing is in play. So this is one I stayed with all day. And now my job is to figure out how to get my risk below the entry as soon as I can giving it room to run so that I can lock in this little wedge of at no lose plus dinner for two. Check or hold. That orange box just represents the automatic 2R battle drill. So that's just 2 times the yellow box. And then I notice we get that little R10 wiggle and collapsing dragon. Because this little price action here, this rebound off the bottom, was enough to make the RL10 begin to turn. But then when the next 3 or 4 bars came in that triggered my entry plus low, that was enough to roll the RL10 over and create that that little collapsing dragon right there. So by this time, I'm noticing that we've already got the PSARs coming into the risk box. So that thing's going to probably be 1, 2, 3, 4. Within about another 5 bars, this thing should have driven far enough. So somewhere between here and here, I should be able to get, excuse me, my risk down to about here, like a 2-bar high. Like I could do that right now. Put my stop right there, anchor that. And then I've locked in that little wedge, and that's the sound of freedom. Nothing wrong with that play. Check or hold. So the open risk, if we were going to measure this by open risk, we could say, look, this thing went from my initial risk, where I have core capital at risk, to 1, 2, 3, 4, 5, 6, in 7 bars or 21 minutes, I've been able to get my risk out of it. So they had 21 minutes and 7 bars to get a shot at me, but they didn't get it. So we might put our stop, let's just say at the 2-bar high. Close. Now, if that gets you out, it didn't get me out because the whole market was melting. But if I'm drawing this correctly, that should be like right there. So if that gets you out, then this should get you back in because you have another little R10 wiggle. And so that length, you would expect to be that length. And we're getting very close to the 2R battle drill. But if you got out here, you still picked up half an R, and then your re-entry would be here. So you're giving back about half an R in that cycle if you got out. But notice that the R10 never even got into the dragon and rolled over. So that is the price. This is noise. But I'm not opposed to you getting this piece locked in. There's nothing wrong with that. But re-entry is the key to sanity, and we'd have to get back in here. Coming close to a decision. It fails below. Now notice that we have another little quiet collapsing dragon in here. It had a chance to break through the PSAR, and it did not. So we take a second position on the 2R battle drill. Check or hold. Standard exit. I'm just waiting for the R10 to come through the dragon, not waiting for price, not getting shaken out by price. I'm just waiting for the R10 to meet the PSAR, and so there's a standard exit. Check or hold. And so that's a 2R on the first position and a scratch on the second position. Re-entry because it does not reverse, and the rest of the market is it did not reverse. The rest of the market is melting down again. So as soon as the R10 rolls over and the PSAR flips, I just put the position back on. There's a standard risk. This is the price level of the 2R automatic 2R battle drill. Grinding, 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 grinding out. So never quite got to the 2R, but there's no buying pressure in there. And this is the 2R, so this is about 1.5. So we take 1.5 and 2, and that's about 3.5 for the day on Intel in about the most orderly road march you ever saw. That looks like driving cattle across Texas, just moseying along, and then nothing really happened the rest of the last few minutes of the day. There was a bit more of a grind down, but it wasn't playable. It was already getting towards the last half hour, and I want to just stay out of it. All right, questions on that one? Check or hold? Take a quick look at the traders today. Let's see what we can see. All right, here's Agnieszka on the Euro Canadian let's see, 5 minutes. She notices about 1.5 R of improvements. It was 0.7 minus. She could have been 0.7 plus. So she takes a quick minus 0.4. And then because it failed to fail further, that's the re-entry. She notices that. And then that would have been the standard 1.1 R exit, which would have made all the difference today. Then I think she's a little late getting in here because the peak of the R10 is here. So we should be on that like right about here. And then instead of a scratch, we'd have a fractional win. And you may not have even gotten out of that. This was a quick exit for minus 0.3. Again, failure to fail. It makes this a re-entry, and then you wouldn't lose money on that one. So another 0.3. So with that 0.3 and the 1.1 and this little micro improvement, she might have had 0.7 to the good. So very good coaching eye and analysis of her own performance. So she has internalized that. Meanwhile, in the gold dollar pair on the 5 minutes, Constantine's favorite, here's a bottom. That's like there'd be your Kata 2, but that's an emerging dragon. She nails that one, and it's 1.3 in hand and starting to roll over. Take it. And now she doesn't have to regret giving all that back. So that's 1.3, beautifully done. So 0.6 net for the day. This is from Bob R., who's showing us one of the longer term views. These are 3-day bars. Why do we care about 3-day bars? Because it smooths the dailies and really gets rid of the gaps. And now you can get a feel that Pep Boys are just oscillating as nicely as you could want with rising lows in this channel. And there was an opportunity in here to maybe participate in a channel trade. And so this thing, if history rhymes, this thing should get back to about 190 from 176. So that's a $14 potential gain just based on projections and drawing wiggles on the chart. But that's about as regular a heartbeat as you could want. So if we saw some recovery in the markets, Pep Boys guys are not buying new cars or repairing them. So there's a $14 upside. So if you could even manage something like a $5 risk, which would be easy on that size bar, you still have a 2-to-1, 3-to-1 to the upside. So Pep Boys setting up nicely. And notice how clean those PSAR flips are for picking the turning points. And even better, how clean the RL10 crossing the baby dragon on a 3-day bar is. That's everything you need for swing trading, fellas. Telling you right now, that's everything you need. My brother's course on that, the long range sniper, covers this, the 3-9. Nolan on Tesla does a very nice job. He's working the COTA 2. He misses the COTA 2 to the downside, which should pay to here. Because remember, when you got that much in hand and it starts to reverse, take it at the edge of the dragon. And then get long and scratch. Then get short when it RLXDs and takes out the PSAR. Because you think, hey, I just saw that move. So if this collapses, I just cut and paste and say, oh, that move should at least be that long. And that justifies the move. In the same, and then the size of this move is the size of that move. So the power of the traders to move price on these different legs really does matter. So here's a nice quick scratch on the COTA 2. There's a COTA 2 to the downside. I mean, it does not get more textbook than this. A high, a lower high, a measured low, and then a collapse. Either one of those entries. And then you get all of that. And again, you get all of this move to the downside when it reverses and comes up to the edge of the dragon. Just take it there. Then you're prepared to take this COTA, this SQC or this COTA 2 and get paid to the edge of the dragon. Great COTA 2 to the downside. Why is that a COTA 2? Well, because this is a high and that is a lower high, and here's your measured low. And now the collapsing dragon, and I want you to notice, see how this collapsing dragon works? That's the collapse off of this support level here. So this COTA 2 is front running that signal. The COTA 2 front runs the collapsing dragon in this case. And you're below a declining VWAP. So this is all about that. That's just well done. Brings home 1.6. Did a pretty good job staying out of the chop, although it was tradable here. So pretty nice day at work. 1.6 in Devon. This is Luke. Welcome back, Ninja Warrior. He's playing the dollar yen. There is a COTA 2, which was available, missed. Another COTA 2, which was available, missed. There's a PSAR flip. He waits for the full risk box sell-off. He takes it. Standard risk. 1.72 on trade number 2,824 of standard work. The 5-minute Aussie is back. Welcome back, sir. Now, this is a lesson in anticipation and belief. What would have been a nice day with +2 covering the -2, you'd have netted 1.2, except we took 6R loss in NVIDIA, way too much belief, and sticking around for full 1R losses in here in the middle of a sideways river. So that was 4R we didn't need to take, and which turns this into a negative day. So we'll just get over that one and chalk it up and study it and get better tomorrow. All right, back to work. This is our 30-minute view. So we're looking at SPY on the 30s. This is market 30 for me. That little couldn't break out of that. There's your collapsing dragon. This was a bad sign for today. At the 5-day low and no support in sight. This is troublesome. And it broke through that key price level of 400. There's going to be some white knuckles tomorrow. Can it bounce off of 400 and resume? Or is this en route back to 380, which is a minus 5%, a correction? So, trouble. We went back into sideways normal conditions today from bullish. So that bull, that little baby bull, just got sick today. On the daily, you can see how the COTA 2 from here, which peaked and now rolled over. This was where it was supposed to work and get a COTA 2 right here. Right here, it was supposed to keep going. You know, it closed well here. If that keeps going, then this is a COTA 2, and we're talking about 430. But instead, you got 1, 2, 3 days of weakness, and the third day was a large range and closed weekly below 400. And it's already testing this support level. But a lot of people are looking at the 30-day low now of 385. So that is problematic. Tomorrow is going to be fireworks. This period of outperformance on where the MACD is above the Red River ended here on that big sell-off. And now it's back in the fall into the Red River, and now it's coming down close to the zero line and getting ready to go into winter. Not so good. Trouble. Keeping up with last week's discipline, what I've done is organize the tactical set by reward to risk ratio. So Devon Energy, which was an interesting play today and was positive for the day, is 10 to 1. There's the S&P, which was down 2% and is a 2 to 1 to the upside. But look at all the other things that are horrible from a reward to risk ratio. So we can zoom in on the ones that look interesting. There's a couple indexes in there that are favorable. So symbols of interest using the 10-day frame. Devon Energy 10 to 1, Microsoft 5 to 1, but it was down 2% today when the market was down 2%. So that's not additional weakness in Microsoft. That's just it responding to the market sell-off. That's okay. In fact, Microsoft down 2% was better relatively than the Qs or the S&P 500. So that's actually not so bad. There was actually some Microsoft buying pressure today. But the fact that it's 5 to 1 is pretty good. Oil exploration 3.3 to 1, tech 2.3 to 1, the market itself 2 to 1. That's just telling you that after this little sell-off and whatever today's market range is, if you just call that R, there's two of those back to the 10-day high. And then we know that since it just broke below 400, it's easy to see how that could be 2R to the downside. So officially, that market is in a compound critical state, and we're going to notice that it also went into sideways normal today, away from the bull. So that's a thing of concern. So this is just one way to quickly filter targets of interest based on swing trade potential. The fact that they have swing trade potential means that they've pulled back and are probably in a compound critical state. So this is, for swing trades, a way to find targets in a compound critical state. Check or hold. All right, let's bring it home now with our standard reports. Let's get this get these bad boys going. All right, so dashboard number 1. So we've come back into sideways normal from bullish normal. We've got some weakness creeping in on the 2, 10, and 30 days, and the 270 went back under the 50-yard line. That is a warning sign. Risk Z went risk off a few days ago and has been giving us alerts to the potential for this downside move, and there's a lot more room for that to get bad. We've got all of these channeling rules where they are above their 200 briefly and have pulled back far enough to oversold on percent R, so now the rebound play is there. I'm just worried that we're at that key price level of 400, and we just barely went into bull before this last few days of weakness, so I'm pretty cautious. But I'm also excited about intraday trading because when we're in sideways normal, that is the perfect time to be an intraday trader because you have no directional bias and no intention to hold things overnight unless, like we are in the swing trade, you've got money in hand and it's testing critical levels and there's no support in sight to the downside. Those are reasons why you might want to maintain positions on the short side. Dow Tactical, again, plenty of auto framers. Look at the weakness in Intel. That was the one we did 3.5 intraday on. That is so weak that is a special case for downside action. That's the weakest symbol in the Dow 30, and more pain and suffering coming. It was down 5.5%, and you might not have noticed that because Home Depot was down 7%, and Tesla was down 5.25%, but Intel, the semiconductors, down 5%. Ouch. Also, a number of 5DDs triggering. So this is a buyer's market in terms of deciding what you want to focus on. In the ETFs, also, plenty of auto framers. Interestingly, no 5DDs. But let's see. Energy and oil. Weakness in the Russell. And I like this on PBW because we got that one on the short swing. And that thing has been nothing but misery. So I like that to the downside. Let's go right to the sniper and Godzilla, starting to show a lot more activity here. Have a couple volatile Godzillas, but also this quiet Godzilla in LUMN, now that we've no longer tracking it, started to have a one-day pop. Remember, that's one we were trying last week, and it never woke up, so we abandoned ship. Nothing in the tactical symbol set. Hey, let's go look at LUMN just while we're here. We've invested some time last week in looking at it. This seems to be fair. See what it is that we missed. Yeah, down 7%. Ouch. God dang it. Perfect PSAR flip. There was the open. There was the sell-off from 380 down to 3. It's only 20 cents, but on a $3 stock, that's a big move. I still think it's too thinly traded for my interest, even though it's an S&P 500. That's what a collapsing dragon looks like. When that thing breaks, there's just nobody in sight. Yeah, I'm staying out of that one. So I don't feel like I missed too much on that. Some I've highlighted on the S&P review. So the one-day movers I'm interested in are the ones that are in the green on Z1 because they're movers, but are also uh, movers on the 5-day. So TAP, Home Depot, whatever WY is, I can't remember. There's Campbell's Soup, ALB, and Intel. So Intel, yeah, buddy. And then in the S&P most volatiles, this is looking at the Z5. I then look at which are the ones that are also vigorous on Z1. So GIS, ALB, TAP, Home Depot, Intel keeps popping up, and then Campbell's Soup. So those are all of interest. Now Campbell's Soup is nice because that's not really a Godzilla because all his trade locations are pretty good, but it's just that he's volatile and in play. So what's that one look like? What kind of pattern is that? That would be a fence sitter. CPB. Campbell's Soup. Oh man, doesn't that'll make an old fat man cry right there? Holy smokes! Why trading ranges matter? Yeah, because when these support levels break, you get the release of like a spring and now a nice pullback and a recovery. So that's going to be on my list tomorrow, ready to go. Because if the market gets good, Campbell's Soup for crying out loud. And oh, by the way, there's your Kata 2. There's your SSC. There's a Kata 2. There's another Kata 2 and an emerging dragon. And this is setting up for a Kata 2. So let's just spend a little time with Campbell's Soup on a 2-hour. Beauty. Still plenty of room to go. It's not even, nobody's even going to worry about it being oversold till it gets through all this crap and above the 30-day high. So 57 is non-controversial. That's $4. And on a 50-cent risk, that's 8 to 1 just to get to the 30-day high. And now notice how on the collapsing dragon and the sell-off and a head and shoulders that it's been holding strong support. So I should have been better at picking that one up. But now that we know that, we can just be grateful that we have a report that shows us Campbell's Soup double yummy good on the most volatile on the 5-day exceptional and the 1-day. And the numbers you can tell quickly. That thing's just a fence sitter and in the middle of his range. Nothing to worry about and no, but there's room to the upside. And he's got a $1.36 for a range stat and an intraday risk box of 15 cents. Yeah, that should make you begin to salivate. All right. Standard sniper stats for our tactical set. The multi-time frame NDX, that's telling you the deal right there. But what's not failing? Remember the McDonald's long? That is so good in comparison to the main body that that's really good. And Walmart just refuses to lose. Yeah. Consumer staples, one of the few safe defensive plays, along with silver and gold. So that should lead us towards wheat and precious metals. Or the XAU dollar pair. Top 5 by trading value right there. There's Intel at number 6. Liking it. So this little breakdown today, after this struggling so hard to make it, and then 3 days of failure with a big red candle, that's a problem because now 390 looks like it's in play. It broke the RL or the regression line slope broke over its 10-period moving average, one standard deviation above the long-term average, and that's a warning sign right here that it was supposed to get better and it didn't, and it's failing right where you would expect it to have failed. So we had warnings on this thing. We're still not in a panic sell yet, but we're close. Tomorrow's going to be decisive. Notice what we have now on the z-scores of the regression line slope. So the 30's been behaving well, but it peaked where it peaked. And the 90 has been in a kata too, but it has started to roll over at the z-score of 1, right where you would expect. And the 10 has already started to almost become abnormally. That is a sign of weakness to come. And so this big move back through the river, if the bottom of the river breaks, then it's back to this price, which is 380. That's why I'm worried about 380 to the downside. And I think that's everything we'll talk about. All right, that's everything. We'll get hooked up and prep for tomorrow. Take good care and see you in the chat room. Good opening sessions in the Creativity 202. Still time to join the course. This is the 0 week where we're just getting onboarding. You can see the overviews on the Patreon site. They're worth listening to. They're very informative. Even if you're not in the course, you would benefit immensely from the overviews of the course because we talk about traders, cognitive skills, emotional resilience, where creativity comes from, and why accountability partners are so helpful. And those are all features of the course, and I think you would benefit from listening to those videos. Won't hurt you. I'm talking to Ohio State University's public affairs office tomorrow. They want to write a feature story on our work, which is cool. So see you in the chat room tomorrow. Let's be locked and loaded and ready to trade.